10th August 2018. A Saturday morning in Pune, India. Cosmos Cooperative Bank opened like any other day. Tellers arrived. Security guards took their posts. ATM machines blinked to life across the city. Customers tapped their cards, entered their pins, and collected their cash. Nothing looked wrong. Nothing felt wrong. No alarms. No broken glass. No masked figures. Just a perfectly normal banking day. But inside the bank's digital infrastructure, something had already changed. For weeks, attackers had been inside the network. They had mapped the systems, studied transaction flows, understood dependencies, and identified the weakest point in the approval chain. On this morning, they were ready to execute. Within the next 48 hours, 94 crore rupees, approximately $13.5 million would disappear. Thousands of ATM transactions. Withdrawals executed across 28 countries. Around 450 cloned debit cards used in a precisely synchronized global cash-out operation. The vault was never touched. The branches were never breached. The attackers didn't steal money. They rewrote the rules that protect it. Welcome to Cyber Vault. I'm Sridhar. Today, we are doing a full technical breakdown of one of India's most sophisticated financial cyber attacks, the Cosmos Bank infrastructure breach of 2018. This is not a story about simple card fraud. It isn't phishing. It isn't stolen passwords. It isn't a rogue employee clicking the wrong link. This is a story about infrastructure manipulation. Attackers went straight to the nervous system of a bank, the ATM switch itself, and compromised the mechanism that decides whether money gets released. And when that wasn't enough, they escalated into SWIFT, the global financial messaging network. If you want to understand how modern financial heists actually work, not the Hollywood version, but the real technical anatomy, you are in the right place. Let's begin. Chapter 1: The scale of what happened. Between August 10th and 11th, 2018, a coordinated ATM cash-out unfolded across 28 countries simultaneously. Approximately 450 cloned Visa debit cards were used to withdraw cash from ATMs around the world. Every single transaction was approved. Not because those accounts held real balances. Not because legitimate customers authorized them. But because the approval system itself had been compromised. The core banking system, the master ledger responsible for validating PINs, checking balances, enforcing limits, and approving withdrawals, was bypassed entirely. Each successful withdrawal was not the hacking of a single account. It was a fabricated green light generated from inside the bank's own infrastructure. Then, on 13th August, the operation escalated. The attackers accessed the bank's SWIFT environment and transmitted 3 fraudulent metric ton 103 international transfer messages worth approximately $2 million. 2 attack phases. 2 financial systems compromised. 1 coordinated campaign. Fraud steals from accounts. Infrastructure attacks steal from the system. Chapter 2: How an ATM actually works. To understand what the attackers did, we need to understand what they broke. When you insert your card into an ATM, a structured digital conversation begins. The machine reads your card data. You enter your PIN. The ATM sends a transaction request to the central switch, the traffic controller routing all ATM communications. But let's go deeper. Behind that simple screen interface is a highly structured financial messaging process. Most ATM communications follow the ISO 8583 standard, a message format designed for electronic financial transactions. Each withdrawal request is converted into a data packet containing specific fields: primary account number, PAN, processing code, transaction amount, transmission date and time, system trace audit number, STAN, retrieval reference number, RRN, terminal ID, and encrypted PIN block. The encrypted PIN is never sent in plain text. It is protected using hardware security modules, HSMs, which generate and verify cryptographic keys. The ATM encrypts the PIN block before transmission. The switch decrypts and re-encrypts it securely before forwarding it to the core banking system. The switch acts as an intelligent router. It does not usually make balance decisions. Its role is to authenticate the source terminal, validate message structure, route the transaction to the appropriate issuer system, maintain transaction logs, enforce basic risk and velocity rules. The switch forwards the request to the core banking system. The CBAs holds the authoritative data, account balances, PIN hashes, card status, transaction limits. Inside the CBAs, multiple validation layers trigger almost instantly. Is the card active in the database? Is the PIN hash matching the stored value? Is the withdrawal within daily and per transaction limits? Is the account balance sufficient? Are there fraud flags or geovelocity anomalies? Has the card been hotlisted or blocked? These checks are performed in milliseconds. If all checks pass, an approval message travels back through the switch to the ATM. Cash is dispensed. The transaction is recorded in both systems. Ledger entries are updated. Reconciliation logs are generated. Settlement files are prepared for end-of-day clearing. The entire process takes under 2 seconds. Everything depends on one principle: verification. The ATM network trusts the CBAs. If the CBAs says yes, money flows. This architecture is designed with the assumption that the core banking system is the single source of truth. The switch does not question it. The ATM does not question it. The ecosystem is built on implicit trust in that validation chain. Now imagine removing the CBAs from the equation. Or worse, manipulating the layer that communicates with it so that approvals are generated without true validation. At that point, you are not stealing from accounts. You are rewriting the approval logic itself. Chapter 3: The ATM Switch Compromise. The attackers did not compromise individual ATMs. That would have been slow, visible, and geographically limited. They targeted the control layer, the ATM switch. They gained entry into the bank's internal network. While the precise initial access vector was never fully disclosed, possibilities include spear phishing, third-party vendor compromise, or exposed remote services. Once inside, they moved laterally and deployed malware into the internal environment. They manipulated ISO 8583 libraries, the global financial messaging protocol used in ATM and point-of-sale systems. They constructed a malicious parallel switch, a rogue transaction processor inside the bank's own network. Then they severed communication between the legitimate switch and the core banking system. From that moment forward, ATM withdrawal requests no longer reached the CBAs. Instead, they were intercepted by the malicious switch. And that switch had exactly one answer: yes. No balance verification. No PIN validation. No fraud scoring. Just approval. Fraud detection systems that relied on back-end validation were blind. From their perspective, approvals were legitimate. Cash was dispensed. Records were generated. But the records were ghost entries, fabricated approvals never validated against real accounts. The machine worked. The rules did not. This aligns with what is known as a FASTCash-style infrastructure attack, a methodology associated with threat actors targeting AIX-based ATM switch systems to manipulate financial message handling at the switch level. When you control the approval layer, you control the money flow. Chapter 4: The Forensic Discovery. Initially, the withdrawals resembled large-scale card cloning fraud. Multiple countries. Cloned cards. ATM withdrawals. But investigators noticed inconsistencies. Back-end logs did not match ATM records. Authorization responses were generated internally rather than routed properly. ISO 8583 message structures showed manipulation. Transaction requests were not reaching the core banking system. Then investigators discovered logs had been wiped. Event traces erased. Evidence minimized. This wasn't fraud scaled up. It was infrastructure compromise disguised as fraud. Fraud detection systems are built to detect abnormal customer behavior. They are not built to detect compromised internal approval mechanisms. That assumption that internal approvals are trustworthy was exploited perfectly. Fraud steals from accounts. Infrastructure attacks steal from the system. Chapter 5: Phase 2: The Swift Escalation. 3 days after the ATM cash-out, the attackers were still inside. They moved laterally from ATM infrastructure into the bank's SWIFT environment. SWIFT, the Society for Worldwide Interbank Financial Telecommunication, is the global messaging backbone used for cross-border wire transfers. The attackers transmitted 3 fraudulent metric ton 103 customer credit transfer messages. approximately $2 million was routed overseas. This was not opportunistic. The ATM phase created distributed liquidity across 28 countries, difficult to trace, fragmented withdrawals. The SWIFT phase created concentrated international transfer through a trusted channel. First they controlled approvals. Then they controlled transfers. 2 layers. 2 objectives. 1 coordinated campaign. Chapter 6: Why this attack was uniquely dangerous. This was not ATM jackpotting. Not card skimming. Not phishing. This was internal logic manipulation. The system never visibly failed. ATMs dispensed cash. Employees logged in normally. Interfaces displayed expected behavior. No catastrophic outages. The theft was discovered during reconciliation, when ATM withdrawal totals did not align with CBA's balances. By then, the cash-out was complete. Automation made banking efficient. Automation also made the theft scalable. Banks automate approvals. Attackers automated withdrawals. Automation without visibility becomes acceleration for attackers. The danger is not noise. The danger is normalcy. Chapter 7: The broader implications. Your money exists behind layers of software. Every transaction depends on validation logic and system integrity. If one critical validation layer is replaced with malicious logic, the vault is no longer physical, it is digital. Cyber attacks today rarely look dramatic. There are no alarms echoing through corridors. No masked intruders. The system continues functioning until reconciliation exposes the truth. In the digital era, silence is often the loudest warning. The institutions most resilient to attacks like this are not those with the highest walls. They are those with the deepest visibility into their own infrastructure, monitoring approval flows, validating internal message integrity, segmenting networks, and distinguishing fraud surges from infrastructure compromise. The difference between those 2 scenarios is the difference between an incident and a headline. Chapter 8: The final question. The Cosmos Bank attack is no longer just a case study. It is a blueprint. The techniques are documented. FASTCash advisories are public. SWIFT manipulation methodologies are known. Yet many financial institutions continue operating legacy ATM switch infrastructure. The real question is not whether this can happen again. We already know it can. The real question is whether the next target would detect it before the cash-out scales beyond control. Before international transfers clear. Before logs are wiped. Because in modern banking, the strongest vault is not made of steel. It is built from code, validation logic, and monitoring systems. And code, if manipulated, does not make noise. It executes. The Cosmos Bank attack succeeded not because the attackers were unstoppable. It succeeded because the silence lasted long enough. If you want real-world cyber attack breakdowns explained with technical depth and clarity, subscribe to Cyber Vault. Every episode maps the full technical anatomy of a real incident. No hype. No filler. Just the real picture. Because the most dangerous attacks don't break in. They operate quietly inside the system. Subscribe to Cyber Vault. Stay one step ahead.